All right, so today we are doing a deep dive into Microstrategy, or MSTR.
Ah, yes, the company that basically decided it didn't want to be just a software firm anymore.
And instead became this ultimate high-risk, high-reward bet on digital assets. So the big question for our listeners is, is MSTR a tactical entry point, or is it just a volatility trap?
It's fascinating because you really can't view it as a software company anymore. It is, without a doubt, the world's largest corporate Bitcoin holder.
And the number is just staggering, right? They're sitting on something like 650,000 Bitcoin.
Exactly. So it doesn't trade on earnings reports. It trades like a leveraged Bitcoin proxy.
Okay, so a leveraged proxy, meaning if Bitcoin moves, MSTR moves faster.
Much faster, both up and down. And that amplification, I mean, that's the whole core insight here. It's a play for people who are deeply convicted in a, multi-year crypto uptrend.
And from what our sources say, management has actually tried to deal with the biggest fear the market used to have.
The forced selling fear. Yeah, they addressed that head on. It was a huge liquidity risk. So management proactively built up this massive $1.4 billion cash reserve.
A cushion.
It's a cushion specifically designed so they don't have to sell Bitcoin during a market correction. It took a huge worry off the table.
And you see CEO Michael Saylor just continuing to buy more. I mean, that signals some pretty strong conviction. Historically, that's paid off, right? MSTR has outperformed Bitcoin in rallies.
It often has. But that aggressive buying,
Mm-hmm.
that's also the source of the single biggest risk.
Which is the dilution.
The dilution, yeah.
So explain that. How does that work exactly?
Well, to buy all that Bitcoin, MSTR is constantly raising capital. They're issuing new stock, taking on convertible debt.
And that money isn't going into R&D for software. It's going straight into buying more BTC.
Right. So while the company's Bitcoin stack gets bigger, the number of shares out there just explodes. So your individual slice of the pie keeps getting smaller.
And that's why traditional metrics are basically useless here. And it leads to this insane volatility. I mean, the sources mention 10 to 20% moves in a single day aren't uncommon.
It's designed to be more volatile than Bitcoin itself, which then brings up a whole other structural risk that has nothing to do with crypto.
The index risk.
Yeah, this warning that major index providers like MSCI might look at MSTR and say, wait a minute, this is basically a holding company, not a software company.
And if they get kicked out of an index,
Then every fund that tracks that index is forced to sell.
wow. So that's just massive automatic selling pressure, completely separate from what Bitcoin is actually doing.
You got it. It's a major technical overhang.
So given all that, what's the technical picture look like right now?
Well, the stock's hovering around $186 a share. The RSI, your relative strength index, is pretty neutral, so it has room to move in either direction.
But the longer-term trend isn't so great?
Not really, no. It's trading below both its 50-day and 200-day moving averages, which for chart watchers is, a pretty clear bearish signal.
So the sources suggest the safest entry would be to wait, either for Bitcoin to prove its uptrend or for MSTR to reclaim that 50-day moving average on some strong volume.
That would be the more cautious approach for sure.
Okay, so the bottom line here seems to be that MicroStrategy is a high beta Bitcoin vehicle.
That's the perfect term for it. You've got corporate leverage and shareholder dilution all mixed in.
So it's a buy only if you're extremely bullish on Bitcoin and you're truly okay with these wild, wild swings. Massive upside if BTC rallies, but a very sharp fall if it struggles.
Precisely. Which leaves us with a really fascinating question to think about.
Go on.
This corporate structure is so new. Should index providers like MSCI create a whole new classification for companies like this, whose main value is a digital asset they hold? Or should MSTR just keep getting shoehorned into the software category, even if it doesn't really fit?
That's a great point. How you classify it changes everything. Something to chew on.